So we're going to follow up and go further on the discussion about hardware investment, and more especially discuss with a lot of great people we have today, our great VCs, discussed about hardware investment, what the difference between the US and Europe, how do we invest at different stage of startups, and also something which is really important is the role of crowdfunding. So, okay, maybe I will introduce all of you and I let you follow up on what you're doing. So, ladies first. So, hi, Kate.
Hi. It's so good to meet you.
Yeah, very good to see you.
Good to see you.
So, you're a senior director at Indiegogo. Maybe
Sure.
you can explain a little bit more what you're doing for Indiegogo.
Definitely. So, hi, everybody. My name is Kate Drane. I'm here with Indiegogo, the world's largest crowdfunding platform. We have been open and having funded projects out of Europe and France since January of 2008. And what I'm most excited about, one, to be here at the Connected Conference, what I do is educate and empower to ensure that everybody has the best experience with crowdfunding and gets the most out of their experience.
Thank you very much. Okay, Matt, maybe you want to add a couple of words. So you are a managing director at FirstMark Capital. You're also co-founder of Hardware New York. And you've been investing in a few great hardware companies like Rolly. Yeah, go ahead.
Yeah, that's it.
Helium, also. Helium, we will talk about it, I think, maybe a little bit. Helium.
Yes, Helium. Yeah, so I didn't cover that in the presentation. So the four companies that we invested in very quickly. So there's Helium, which is a San Francisco-based industrial internet platform that does sort of full stack to enable anything from connectivity to data management. There's Spratling, which is a line of connected family products, starting with a connected baby monitor. This company called Kinsa, which is a mobile health company, but that has also developed a connected thermometer. And the last company is Rolly, which is a UK company which we're very excited about, which is trying to reinvent musical instruments, starting with a crazy, amazing-looking keyboard that you guys should check out.
And Kinsa was funded on Indiegogo.
That's correct.
Okay, so Romain. Hi, Romain Lavault. So you're general partner at ParTech Ventures, and you're in charge of seed investments. You also invested in a few startups in the hardware industry, and I think ParTech have a huge tradition of investing in hardware in their previous growth fund. So
yeah, that's right. It's we out of our 25 to 30 investments per year, we tend to do a couple in hardware usually. So to name a few, we've invested in Sigfox, in Seed, Series A, Series B, invested in InventSense when they were worth 50 million, which was a pretty large valuation at around, and 1.6 billion when we exited on the NASDAQ. ACO in the chip industry, Prism, so the US Prism, not the French Prism, and more recently Lima, ESKN. I'm working on a couple more with those guys on my left.
Cool. So Olivier Huez, your partner at C4 Ventures.
Yeah, people might not know what C4 Ventures is. So C4 Ventures is a new fund that Pascal Cagny is launching. Pascal used to run Apple Europe for about 12 years, if you don't know him. With C4 Ventures, we invest in early-stage startups in Europe. We also help mature companies come into European markets. And we focus our investments around two separate themes. Basically, we look for startups which will represent the future of hardware. We'll talk about that in a second. And also the startups which disrupt the purchasing experience. And a few examples, I guess. So on the first theme, so we invested in companies like Enki in the US coming into Europe this year. And closer to home, Netatmo, Matt talked about them. ISCAN with ParTech, Locate in Berlin, and a few others as well.
And so you guys have in common Netatmo, I think. So you're helping me doing the bridge to follow up with Julien-David.
Yes, so hi, I'm JD. We're Iris Capital. So Iris Capital has been around for the past 30 years or something. So we've done quite a lot of hardware. We did Wavecom back in the days, Varioptic. More recently, indeed, we've done Netatmo, because Netatmo, Fred Potter was actually the founder of Sirpac, which is a very successful hardware network story. Then he did weird things and moved on to Netatmo, came to us. He had already built his company. We do also companies funded out of Kickstarter in Germany, Kobe. We do e-scooters, connected scooters. I'm waiting for mine. It's called Unu Motors, also in Germany, coming in France in Q3. So Iris basically accompanies companies from very early stages to very late stages and has been around for quite a while with hardware. Also, we have strong partnership with Orange or Publicis, which drives us more and more also onto hardware because of connecting the stores, because of the connected home, so we look into it quite actively.
Great. So I want to jump actually on what you were saying previously, and also because I read your article about it was straight to A, and you explained the fact that the landscape has been changing a lot in the VC industry, and right now we're experiencing like different types of rounds, and some of the startups they directly going straight to A. Do you believe this something is happening also in the hardware investment area, like the straight-to-A process? Maybe you can explain a little bit more about it.
Yeah, so the straight-to-A is a phenomenon that we've observed in the US, which is this concept that the name indicates, that people skip the traditional seed phase and go directly from nothing to raising a round that can be anywhere from 5 to 15 million, actually in some cases higher than that, which is probably the result of a combination of things. So one is the market being very frothy in the US, and people competing ferociously for the best entrepreneurs, and two, the fact that there is a second or third generation of entrepreneurs that are coming back with great experience, great success, and in this market they can do pretty much whatever they want. So it's very much happening in the hardware world. There was a good example of that just last week or 2 weeks ago, a company called Samsara that was started by the founders of a company called Miraki, if I remember correctly, that sold to Cisco for 1.2 billion or something. That did a straight-to-A round led by Andreessen Horowitz, where they raised 25 million. So they basically on a PowerPoint, right? With no product, with no prototype. And I guess in some ways, so Magic Leap, which is this very secretive, crazy, interesting AR company in Florida, did a 592 million straight to A.
I think I will jump on the Andreessen Horowitz approach, like putting a lot of money and doing straight to A rounds, and making a link with the Enki investments. I think Enki, they do like a 2 straight to A, if I can say, like raising 50 and then 50 again. Olivier, maybe you can talk a little bit about it as an investor.
Yeah, so indeed we invested with Enki alongside Index Ventures and Andreessen Horowitz. Enki had something which I think is hard to replicate in Europe, and that's 2 reasons. First, they're in a valley, and let's face it, that makes a big difference. They also have massive IP. Their AI is just mind-blowing. And on the other hand, things move faster in the US, which has pros and cons. If I take the example of other companies we invested in France, like Netatmo and ISKN, you can live by with a very simple and bare-bone customer service in Europe, whereas you can't afford to do that in the US. In the US, you have to have 24 hours telephone support service from day one. People would expect that. Also, your distribution strategy needs to be different. So everything goes faster in the US, so if you have the right IP, you can afford to raise big amounts at very early stage, whereas in France or Europe more generally, maybe you don't have to, but you also have structures like BPI or other structures which will allow you to raise debts much sooner than you can do in other markets. So I think it's a mixture of strong IP and being in the right market as well.
Romain, yeah.
Well, plus you don't get to do so much with $1 million. So I think there's seed round for software and seed round for hardware. And of course, it's much more capital intensive. You covered it. There's so many things to do before you can get your products in the end of the consumers, and what happens next. So that's probably the reason why we see kind of bigger rounds, so bigger risk for us.
Do you believe that crowdfunding has been helping, like doing this bridge, like between the seed and the Series A, and like bringing maybe a solution for funding and market proof? As you invested in a company actually who went through a lot of them went through Kickstarter campaign, and how do you think crowdfunding has played a role in this?
Yeah, I think I agree with Matt that Kickstarter is not a good predictor, or crowdfunding in general is not a good predictor of success. So much components at play. But on the other hand, we would not do seed investments in hardware without crowdfunding, just because it helps us share the risk with the consumers. We get a feel for the market fit. The problem is it's a market fit of yesterday, and we'll ship the product tomorrow or after tomorrow, most of the cases. So there's risk there, but at least from a equity perspective, it's more efficient. But it's just like any investment, we have to diversify, and so the big problem is, and that's really our view, is with the time it takes, and it takes, no matter what the entrepreneurs say, it will take 18 months from prototype to really having a product that you can sell. And so we can't really invest for what the consumers have bought as part of the crowdfunding campaign. We have to invest in what this company can deliver in 3 to 4 years. So touch the DNA of what they can build next, and that's where software and hardware mix together. So it's really the DNA of our investments. It's every time we see, okay, if this doesn't fly, there's a plan B. It could be B2B, or it could be another product in different field where we can pivot. And so we need the crowdfunding, but we also need a team that can achieve something different than what they've sold already. And so, like a lot of the teams when you look at the teams actually in hardware startup, it's true that there is a missing generation. Rather, they are on their 20s and they just like finish school and they like launching a campaign on Kickstarter or Indiegogo and trying to build something. Or you have like older people who already experienced, like the founder of Nest or the founder of Netatmo. How do you manage as an investor, like to it's easier, of course, to invest in companies maybe like Netatmo with Fred, like already exited before and really experienced like founder. How do you manage to validate the team and to invest in very young teams? What's your position on that? Well, there's one thing that's for sure, hardware burns in every sense of the term. So the thing is, when you're looking at a team that's doing hardware, you got to have experience, and I feel that we're all paraphrasing what you said, Matt, I'm sorry, but you have people knowing software, and software is lean. You can do a V1.0, 2.0. Hardware, you ship or you don't ship. It's hard. So when you look at a team, you look at great people, great ideas. Kickstarter, crowdfunding gave ideas about the success of the potential of the idea. But the thing is, do you ship? And the truth is, on software, you have geniuses in T-shirts and all that. In hardware, you got to go to China, man. You got to go there. You got to get your supply done. You got to stabilize your product, because suppose you know how to manage an Alibaba campaign, choose your supplier and all that. You still have to stabilize your product prior to going to the factory. So sometimes you see that in very young entrepreneurs or people with experience around you that do a Kickstarter to validate the concept, that use it as an MVP to make sure that what they were offering to the campaign made sense, but they're industrials at the base. Or they're not. Netatmo, Fred had delivered already quite a lot, and he had the money to afford his first step. And he came to us, he was already shipping, he was already selling. It was a true Series A where you just had to pour money onto it, and Series B and Series C. Kickstarter, well, there's a T-shirt, ship happens. You gotta ship at some point, and that's the real segmentation. So if you don't ship, we take risks. And what we try to measure is your capability to go as close to shipping. So the one thing I would say, what they have in common, older ones, younger ones, Kickstarter, non-Kickstarter, they have in their team capabilities that make you believe that you're going to go to shipping dates and that you're going to have a spread on the shipping date that will be short. That's probably a decision maker for me.
Wait, and Bar, just to add on to that, taking what Matt was saying in his presentation, like if it is a young team, having something like Hardware Club, does that help to validate or like to help you feel more confident in it, I would think?
It brings experience. It brings experience. I mean, in the Hardware Club, they do exchange a lot of ideas. We've seen them because we see one of them and suddenly we're like, oh, that's funny. I heard that last week. Oh, yeah, all right, I get that. But so, yeah, it's experience. Anywhere you can get experience. And on this one, accelerators, sharing clubs, ideas that help you scale. And you scale when you're several people. So a club like yours, yeah, you scale. Thanks.
Kate, I want to jump on that. And the fact that like Indiegogo has been, I think, helping a lot of great startups like Misfit, Jibo, Scully, like amazing startups who are actually building the future. And how do you see the role of Indiegogo, like of your platform? Is it just about like putting a project and then put it like and show it to the crowd, or also bringing support to the team to actually build startups on top of those kind of projects?
Yeah, what we believe is that we're here to help businesses get smarter faster, and so that's what our tools are intended to do. Some tools that investors look at when they look at Indiegogo campaigns is, one is how they use their data. So for us, you can do pixel tracking through our platform, and so you can actually see because a lot of times people are like, oh, this is what I've heard, you haven't said it, but that it doesn't demonstrate a wide capability, it just shows early adopters. And so what we show is through advertising to be like, okay, out of this wide swath, this is the rate of return from it. Also, when we've seen that investors use us for validation. For example, Gilbin Penchina actually has a fund on AngelList where he invests only in Indiegogo campaigns, and within the first 24 hours of it being open, they raised over $75,000. And you look at somebody from like Misfit. One I'm wearing a Misfit, it's pretty fun. What they were able to do, they talk a lot about how they got smarter faster through their campaign because they were able to make a lot of those assumptions and take them away, like that people didn't want colors, people didn't want accessories. So what we see really is a way for you to get smarter faster, be able to get that user feedback, and be able to be lean as you're growing and as you're building your business so that you can focus on shipping the right product.
Sorry, one thing we haven't talked about with Indiegogo and Kickstarter that people tend to forget, it can also be used as a distribution channel. For companies based in Europe who want to go to the US, basically you've got Amazon and the rest is really hard. So as an alternative to Amazon and your eShop, using Indiegogo and Kickstarter can be a very effective way to distribute your products in other territories.
Totally, and for us, we see, like, people in France and people in Europe have been using Indiegogo. What we just introduced also is a shipping tool, so you can restrict it. You can be like, oh, we don't actually want to, you only want to ship to US, you only want to ship, because that's something, again, from the shipping, that when you use a crowdfunding platform, what we've heard in the past is that perhaps it's harder to ship to China, and that it takes away from some of the funds. And so what you're able to do is to say, I only want to ship to Brazil, and then they can see that actually there's a huge market there. So shipping, huge deal.
Maybe we can say that the role of crowdfunding is it's basically like doing pre-orders, but on another platform and not on your website. I think it's already existed before crowdfunding, like the fact taking pre-orders to manage to build a hardware startup, a hardware company. It's just the fact that Indiegogo and Kickstarter bring the possibility for funders to go directly on another platform and to try it on another platform without maybe taking the risk or without hiring some people who are able to manage like their own website and do the pre-order campaign. And I think, Matt, you have a lot of startups like in your portfolio who actually didn't go through a platform but decided to go on pre-orders online on their own website. What can be the main advice you can give to startups that are actually asking themselves those questions?
So I think the reality is that a lot of those companies were able to do that because they were already funded, and if you funded, there's some great benefit in controlling your own destiny and controlling your own experience and your checkout process and all the things. So that's the main benefit. When I was talking about crowdfunding not being a great predictor, I think that's really sort of our issue from as VCs. From an entrepreneur perspective, I think crowdfunding makes tons of sense. I think crowdfunding pretty much, single-handedly brought back hardware as an investment category. So the role of crowdfunding has been immense, and I think it's still a great idea for entrepreneurs to do it.
Someone tweet that? That's amazing. That's such a good quote.
My one comment again is that it's tricky unless you're able to know exactly when you're going to be shipping. I mean, we have tons of examples. It's incredibly painful if you don't ship. People get mad.
Yes.
And and also people get mad when you get very successful on a crowdfunding platform and then you get acquired for a couple of $1 billion.
By Facebook.
By Facebook, yeah. People tend to react fairly negatively.
I don't know. I get the feeling that having the crowd behind you can be very helpful and can help the startup actually iterate on the product and change, like you were saying about Misfin, changing the color, like building different feature. They might be not aware of that when they just not in contact with the crowd, but it also can be like a bit dangerous because I don't know, maybe Apple put the bar very high, and like customer, there are very high expectation regarding the product, and so the issue about being able to ship a product and like to ship a good product, actually, it's very something really important. And yeah, I don't know, Romain, what you've been like experiencing that with two crowdfunded startups. Yeah, one is shipping right now, so.
Yeah, I think this is exactly where crowdfunding can backfire. Most hardware entrepreneurs are product enthusiasts. They're passionate about design, they're passionate about the UX. They get a lot of good ideas, comments from their backers, and there's a trend to kind of iterate and integrate some things. Like when they give incentives, to raise more money, they give more features, but they don't really realize that those features will be held to develop. And because they're product focused, they tend to forget that manufacturing part is a big part of being a hardware company. And so in their planning, it's like a small bar, and yeah, we'll do that when we're ready, and then we ship. It's what you noted. And the problem with crowdfunding is you get an unprecedented level of transparency with your customer base, because they know everything you're doing, they know if you're late, they know you're up and down, and so you expose yourself. If you iterate too much on your product and you promise too much, and you are too optimistic on manufacturing milestones, then it can backfire. So it takes that management. It's where we help as well. It's bring them focus on all the necessary steps to be able to ship, and it's not just a product, and manage their community. There's a big step, and they're not necessarily ready for that in managing the community of backers, and sometimes it's a very large community.
We have the feeling that actually manufacturing distribution is going to be like just something you need to do, but it's not going to be like what makes you a successful startup in hardware. We have the feeling that software is really important. Do you see in your portfolio sometimes that the issue is not about manufacturing, but it's mostly about community, but also software? And how do you manage as investor like to advise a startup like to face this kind of problems?
In our case, this is how we select companies. We want a high content of software. And we almost want the software to have a life on its own. Just in case the product doesn't work, we can still iterate from there. It just makes it much more complex because both ends of the product need to be ready at the same time, hardware and software. And they don't have the same lifetime. So some things that you iterate on the software part might require hardware improvements, and you make those hardware improvements, and you realize some of your software components are not compatible, and etc. And in the meantime, a China supplier gets out of business, so they stop the production of that component. It just increases the complexity, but it's what makes it fun, and I think it's what makes it rewarding for us as investors. It's more of a binary play. There's no intermediate success. But we also tend to see very large exits when it's successful. So this is what makes it fun.
Another pitfall to avoid is that usually the people they're talking to, meaning the early backers and the VCs, are not their target audience. We're all very early adopters. So as the French say, we always advise our startup, think of Madame Michu. If Madame Michu is your target customer, does Madame Michu understand your product from day one? That's one thing that Fred Potter does really well at Netatmo. The product come out of the box and you plug them, and in 2 steps they're all set. If Madame Michu cannot set up your product, then they will stay on the shelf and not sell out.
I think it's something I need to bring to the US. Madame Michu. That's a good
one. So hardware needs a lot of cash. So we've seen that through, and thanks to crowdfunding, it has been a way for founders actually to start building their startups, then to test on a platform if there is a market, and also to get a few funding to start their first batches. But then you need a lot of cash to scale, like to mass produce, to do marketing and everything. So what is your position? We've been a bit talking about it earlier, but what's your position? Should a hardware startup go through, I will say, in the lean investment approach, like seed, then crowdfunding, and then raising different rounds, but might be facing like a big competitor in the US who got the full stack, like the 100 million of Andreessen Horowitz, like to build the company? What can be the best approach, and what are the pros and the cons of those two approaches?
proof. There's no easy response to your question because I think the environment is changing. I think that today, to scale, you need money, no matter what. So, and money costs something. You go to Kickstarter, you create pressure of your customers waiting for you. What I think, though, is that with the appearance of capability to scale with outsourcers like Jabil, with clubs like yours, you see progressively clusters appearing that are like, you know, step one, step two. It's more like fencing now. You just do this and then do that. So I think you can go to progressive steps and figure out what is the area where you're going to burn a lot and what's going to be the cost of that capital. And that helps you qualify the kind of money you need. That's the best answer I have for now. And then the second thing is, I think that you should do a Kickstarter or go see a VC. For me, it's the same thing. It's a sort of money that's relevant to your business. For some of you, you'll do a B2B product, so forget about crowdfunding. You're going to be asking for an industrial partnership or for a VC to bet that your B2B market, smart metering, Sigfox, whatever, is going to be supported by that VC because you're going to drive industry. In some cases, B2C will want to help you achieve that and give you money. But in any cases, when you see us, you need to have a scenario in mind where you don't raise money. Because my question when I meet hardware companies is, suppose you don't get my money. Suppose you took that Kickstarter money, can you ship one product? That's all I'm asking. Because the moment you're able to ship one product, everybody at this table will love you. Everybody will say, yeah, let me give you 5 million and ship 5 million products. So you need to live, when you build a hardware company, as far as you can, as if you were going to ship one product by yourself. If you've got one, trust me, we're here to help you scale. No problem.
Yeah, so I think if you're, so I agree with all of this, I think if you're among the lucky few that can actually raise money, I think for hardware you should raise as much money as you can. Unfortunately, that may mean that you take more dilution. But it always takes longer and costs more money than one hopes to build a product and ship. So again, if you have if you're lucky enough to be offered money, I would just take it and raise as much as possible. And to the scaling thing, there's one interesting aspect about a hardware, which is that you definitely need money to scale, but there's like this interesting thing that happens once you've shipped a product or two and are starting to ramp up sales, which is that you get to that stage where you can go back to everyone and renegotiate everything. So you can renegotiate with your contract manufacturer, you can change contract manufacturers, you can renegotiate your retail deals, and actually you see that sort of by the Series B level, some of those companies are starting to see their margin increase quite substantially. So, which is sort of different from software companies, especially SaaS companies, where actually the more you go, the more you need to spend to acquire customers, for example. So actually the more your margin goes down. So there's that interesting dynamic, and again, to the point that people are sort of rediscovering hardware. There's now a bunch of VCs that made investments 2 years ago that were C, now went to A, and now reaching the B, and they're actually realizing that it's not that bad.
And if you look at the figures, for example, of Fitbit, they're quite impressive. And I think I was very impressed by the fact that if you look at the amount investing into marketing and the impact into sales, it's really unbelievable. So it's really also shows, and the margin is like really great, like it's around 40% EBITDA, something like that. So it's really impressive and showing that hardware can be very like capital efficient and
at scale.
Yeah, at scale, exactly. We're mostly talking about B2C, and so if we look at the money it's needed, like to reach the stage of Fitbit, for example, what will be the key moments in a hardware startup, and like comparing and making the link, with the Series A, Series B, and stuff like that. Like seed seems to finance the prototyping phase. What is required for a Series A? What is required for a Series B, and then go on.
I'd say for me, the two key moments are the first time a big retailer decides to take your product and put it on the shelves. That's a life changer. Even though they will take 40 or 50% of your margin, that's okay. It's necessary. And the other very important time is when your first customers get their hand on your product. everything that happens upstream is for those moments. I think, again, I've seen a lot of underestimation of the time it takes, the time and money it takes, especially because entrepreneurs by design are optimistic, otherwise they wouldn't be doing this. So they don't tend to plan for mistakes, for errors, for things that happen that are not in their control, suppliers, etc. And they treat those as they come, but of course it makes it unpredictable. And there's a lot of competition going on. The problem with a crowdfunding campaign is that you give your idea to the world, and there are other teams out there that can take it and execute faster. So that's also a big risk.
So but what would you recommend to that? Because I get that question all the time. So what advice would you give to an entrepreneur who is in that situation?
I think I'm with Matt on this. It's try to crowdfund as late as you can, when you're ready to ship, basically. It's a great marketing and PR platform, and you get your customers. It's also distribution, but you got to be ready. So yeah, I think it also participates to reducing our risk, so it's better. So I think it's mostly good because you get the word out and you get exposed.
Money.
Yeah.
So one more word in terms of steps. I think the next big steps for me is the second product or the next iteration on your first product. We see many people who can build a great product, but do they have the capacity to make it even better, which could be a different generation, or even better, can start generating a range of product. And I think this is the second biggest step, I think.
I have a question, like maybe a bit strong question, but if you look, for example, at Enki, so they had a lot of money. So they had a lot of money to hire a lot of people, a lot of PhD, a lot of great AI team. They built the product. The launch was, okay, let's say, I love the product, I love the team and what they're doing, but it's so-so compared to the money they had on the bank account.
I wish I could tell you what's coming in 2016, but you'll be falling off your chair.
Yeah, but this is my point. This is actually, when you're putting that amount, that level of money into a startup, maybe they're not doing like the lean approach, like building a product, they're iterating in the product and then trying to launch another one and go through the difficult process of building the relationship with distributors. And so what's next for Enki, and how do you manage to, with that amount of money, to go on the market and to be the leader?
I mean, actually, Enki was the second best-selling toys over Christmas in the US last year, so I think they've already achieved quite a lot. This year, they're launching the second generation of their product. But in the meantime, and here we can talk about the hardware versus software, the hardware has remained the same for 12 months, but they haven't reached the game. I mean, for people who are in video games, they introduce bosses and upgrades that you can apply to your cars. So they haven't reached the experience, and we've seen that in the KPI. The repeat of the games have increased dramatically. So it's not like one step, two steps. It's actually a lot of improvement. They've used the software to make their hardware better. Now they're making their hardware better a second time, and in 2016, 2017, they'll be launching new amazing products. So it's the same as everybody else. They were lucky or very good, actually, to have a mind-blowing AI, which allowed them to secure the biggest funding maybe in that area. But they've used it really well, I think.
And maybe I can jump on that and ask you guys, what are you looking for, like right now, in terms of investment? What are the area really, like you've been like digging and searching for new product, new devices? AI, toys,
well, AI is one
drones.
of them. I think typically something which bridges the digital and the physical is something that we love. It can be in the gaming area, but it can be in other sectors. Typically, we have kind of a top-down approach. We have trends that we strongly believe in around home automation, around this physical-digital thing. And we also have a bottom-up approach. We typically look for founders who can actually put all that together. There are not that many founders who can control the software, meaning the firmware, the backend, and the app, the hardware, the design, the go-to-market. This is what we look for in founders. And also for product, like Matt said, who can become big in a big market.
Julien-David, GD, what are you looking for?
Yeah, I think we're all looking for the same thing. So, nice companies, scaling, disrupting. I think that on the very early stages, we're looking for transformers, people who are bringing, let's say, the next step in an interface or an interaction. I don't know, usage of machine learning into detecting stuff that you didn't automate before, which brings us to deep learning, because I think everybody here has probably invested at least once in machine learning now, okay? Let's do deep learning, which will be AI. Then on later stages, the truth is we talk about the market as if everything had happened already, but truth is very nice SaaS companies combining sensors and aggregating information for customers. How many can you quote right now? Not that many. So I think there's a real maturing market on B, C round companies doing proper SaaS to B2C and helping use the connection. I think we're just at the beginning of connecting stuff. Look at Sigfox just raising a massive round. Look at small companies all around actually now starting getting orders. I think we're only at the beginning of connecting stuff. So connecting stuff is early stage. Using that information and managing, let's say, life management, company management, SaaS, is probably later stage. So that's how we see things at this stage.
Maybe just, Kate, I want to ask you actually, and then we'll follow up regarding the trends. Indiegogo is actually a very good platform to see what's going on and like to do deal sourcing, because you are the first one actually to have the access of the startups who are about to launch campaign on Indiegogo. And so we've been working a lot with your teams in San Francisco, in the UK, and I know there are some trends right now you've been seeing on the platform, so maybe you can tell us a bit more about that, like a different area when you see a lot of startups going.
Yeah, it is interesting because we get to see the trends before they get to VC funding. So last year we could definitely see the wearables coming in, and we saw a lot of the connected homes, IoTs coming in. Now we're seeing a lot of, like we just came out of the drones. There was a lot of drones there about in the fall. What we're seeing a lot coming up also is more of the artificial intelligence, more of the robots. We're also seeing a lot of smartphones, which is interesting. I didn't expect to see as many smartphones and to be as successful as they are, but that's a market that we see of people who are wanting to use the worst word, to disrupt those industries. Sorry for using that word. But and so those things also surprise us, because we're like, we would have, or I mean, the campaign that just raised $12.8 million was FlowHive, which was a niche product for beekeeper, or to make anybody into a beekeeper, where you can it can turn a tap to make honey in your backyard. $12.8 million out of Australia. That was something that blew all of our minds. We did not see that coming.
Yeah. What about you guys? What are you interested in, and what do you see the future like?
I'm very bullish on beehives, connected beehives. Let's see. So enterprise, the enterprise side of the Internet of Things, a little bit to your point. So sort of vertical solutions, leveraging the power of sensors. To provide specific solutions. This whole world out there of like dusty old, factories and also different ways that they've seen zero innovation in the last 50 years. So it's not super sexy. You have to spend a lot of time going into godforsaken places to install your sensors and all those things. But it's something that those guys want. There was a previous generation of companies trying to do this, but it was clunky. There were also like connectivity issues. I think that's wide open. I like security. The security for the Internet of Things is such an obvious category, but not much has happened yet. There's been the application of existing security solutions to this. I very much like the world of 3D, AR, VR. I think it's mind-blowing, and I think it's, it's going to be the traditional hype cycle here, but I think it's just starting. Those are. I like drones as well. I like enterprise drones, for agriculture, power line, sort of those surveillance and that type of thing. I've struggled a bit to find truly compelling drone teams, but I'm interested in the space.
Cool, you heard it. So Romain?
Yeah, when we look at all those projects, we can see something emerging, and so if we keep our eyes on the road, I think what all the entrepreneurs in this room and the companies exhibiting are building, it's the future of computing. And so we tend to see all of those connected devices as one component in that those future services that will emerge from this new type of computers. So either interface solutions, so whether it's gestural, voice, visual, etc. And there are objects that enable a new service. And we were struck by how the new generation of product connect the digital world and the physical world. So we tend, in the last 10 years, digital was kind of a parallel economy, parallel services. Cloud was different from physical. And now we can apply digital services to physical elements with the objects. And that's very different. And we see that as kind of a Lego box. So we have all the components, but now it will take imagination to invent the new services. We probably have no idea. So we're very sensitive to those weak signals and find the entrepreneurs that are building that next generation.
And good. So I want to thank you, all of you. It's actually great to have VC back in their hardware and investing into a hardware startup. There are very few and still missing more, but I think there are great events going on in their hardware industry, great exit and great product like going out on the market. So thank you very much for your time and enjoy the rest of the conference.